And welcome back to the Lance Roberts Show podcast right here at realinvestmentadvice.com. Our special guest today, Chris Kimble, Kimble Charting Solutions. So Chris, we've talked a lot about the markets, kind of what's happening. In a nutshell, I just want to kind of review what we said is that, the markets, whether it's the bond market that we're talking about here, or if it's actually just the S&P 500, there's some things that are occurring here that suggest that investors be a little bit more cautious with their investing. But this is where the misnomer comes about technical analysis. Whenever I write an article talking about technical, something technical with the markets and saying, hey, this suggests there's more risk than reward right now, take a little bit of money off the table, people immediately assume that means sell everything, go into cash, and you're trying to time the market, be all in, be all out. And there's certainly people that do that from a trading basis, but from a technical analysis standpoint, what, at least how I manage money, is trying to use and understand what price action is telling me to mitigate some of the risk in investing. Can you talk about, from your own perspective and from your own look, about how investors should look at technical analysis? There's so much misunderstanding about what technical analysis is. It seems complicated. It seems very, kind of magic in nature, but can you just kind of explain to people what they should be looking for and some ideas about how to get started if they've never used it before?
Those are great points, Lance. I think of the movie that people don't want to hear about, the title Shades of Grey. As you just mentioned, though, when it comes to portfolio allocations or decisions, Lance, and combining full analysis, it's not like the light switch of being on and off. It's about some shades of gray and making adjustments to portfolios. And, I sat in your shoes a long time ago. For 27 years, I was a financial advisor, and then I started creating these different systems in the technical analysis, and people suggested, hey, Chris, you need to get this out and share with some people. And so I found myself really challenged, Lance, running a practice and then trying to embark kind of on this new career. And so I went to Sir John and asked him, what would you do with this technical analysis? And he said, well, Chris, do you want to serve? I had a small practice in Kansas of about 300 customers, and he said, Chris, do you want to serve those 300, or do you want to take a chance on serving, say, 10,000 or 20,000 different people? And so you see the route that I took.
Right.
I'm trying to help take the bigger picture. And so I'm an Occam's razor fan, Lance, as far as I want to suggest to people, what's the least amount of information or input that's needed for you to make a quality decision? And so I challenge people that we all have three things in common. We've always sort of two. It's death and taxes. But the third one that we're also have in common is we're all judged on how we trade price. And so my main focus is looking at price. And if I can encourage people that look at charts, if you can find a way, and I found a way years ago, to actually hide the name of a chart to where you can't see what it is, you have a much better chance of making an unbiased decision. We're all biased in one way, or another. And so I found a way to put together like 150 charts, Lance, of a whole different variety of assets. And then I hide the name, and I just look for chart patterns. And then I narrow the 150 down to 10. And then when I go to make a decision, one of the last things I do is I better find out what I'm going to buy or sell. And so I think you have a much greater chance. Stay away from the news. Like I said, that Popular Delusions book, if you can stay focused on not getting caught up in the news, you can make a lot better decisions.
Well, that's great advice here. And again, when most people are thinking about technical analysis, one thing I think, I read a lot of I read a lot of stuff from a lot of people, yours as well as a variety of other people, and some of the things that people do technically become very convoluted, very very complex, and they make sense if you're very familiar with technical analysis. But sometimes you can also be kind of paralyzed by having too much going on technical wise. So if you're talking to somebody who's never used technical analysis before, wanting to try to start implementing some of it into their portfolio management process on their own, what are some of the basic indicators that you think are most beneficial just to start learning with, start applying some price analysis to position management?
As you have on the screen behind you, Lance, one of the great tools, to me is moving averages that have, ironically, they've been around a lot longer than I have.
They've been around 35 years.
Yes, that's correct. And so I think those are great, starting points. And John Murphy, back in the 80s, I became a big fan. I learned so much from him. And so, if somebody wants to learn, John's got so much great material, Lance. I know you're well aware of him. And
Mm-hmm.
he's just got a great, simple approach, and it's been so helpful to me. I wouldn't be where I am without people like that.
Yeah, well, and I think, and that's the way I look at it too, is that, when I look at our portfolio management, we use basically 3 indicators just to manage kind of portfolio risk. And that's all we're looking at doing. Nothing really more, nothing really less than that. Because again, all we're trying to do, our view is, and this is just how we manage our money. We're not saying this is how everybody should. This is just how we manage portfolios. Is we're trying to capture the long-term trend of the market. So what we use technical analysis for is to determine, is the trend positive or is the trend negative? Unfortunately, since January of last year, the trend has been sideways, and this is this makes it difficult to manage money and allocate positions. And it's been a very tough year for investors, really, kind of over the last year, because this has been a big volatile range that we've had. So, until this market really declares itself in terms of a direction, it makes it much more difficult to manage exposure. And kind of going back to talk about this real quick. When you look at this type of action and you compare it back to 2007 or even 1999, as we were going to 1999 and 2000, do markets generally trend sideways like this and then start another leg of a bull market? Or is this typically more coincident with the topping process in a market, maybe potentially a change in trend from bullish to bearish?
Great question, Lance. As I mentioned earlier, when the S&P was up underneath the 161 level, it traded sideways for 20 months. So it was a great question. Is this a topping process, or was it a base to push higher off of? Well, we know in hindsight it was a base to push higher off of. Mm-hmm. And so we're going to have the same legitimate question, right now. Is this base building, trying to fool the majority of the people, or is it a topping process? And, one of the things, until proven differently, I can't emphasize enough just the rarity, Lance. It doesn't matter how long somebody's been in the business. If you would go and just look back in history, I don't think you could ever find a point in time that there's so many Fibonacci extension levels that are in play as resistance at the same time. And so, to me, Lance, it's raise cash at the top of these, but then also you just got to be totally aware with an open mind that if the markets do break out of those, despite excessive valuations, it's probably going to attract dollars. Mm-hmm. So I don't think if I could narrow it down to any one thing, it's what's the market going to do at these 800-pound resistance lines? And they're resistance until broken. But if they do take it out to the upside, we have to be open-minded to higher prices.
Well, again, I think that's exactly the right thing, which is we have to do what the market tells us to want to do. Again, too many investors say, well, I can't sell anything. I've just got to sit here and hold it because that's what, Wall Street tells me. I have to buy and hold. Just because we sell some stuff, take some money off the table, raise a little bit of cash, doesn't mean that we're excluded from buying back in if the market starts to move higher and the opportunity presents itself. Chris Kimble, KimbleChartingSolutions.com. I certainly encourage you get by his website as well as follow him on Twitter. It's always great information. And of course, watch this full podcast at our YouTube channel. Simply go to our website, realinvestmentadvice.com, click on the YouTube channel, watch the entire podcast. Great information from Chris, and we'll have him back. Don't worry, we're going to have Chris back to talk more about the markets, particularly as these things develop here over the course of the next few months. Thanks for joining us today. We'll see you next time on the next edition of the Lance Roberts Show podcast right here at realinvestmentadvice.com.
You can get daily real investment news you can use, delivered at the speed of the internet. Sign up for Lance's newsletter now at realinvestmentadvice.com.